Based on the historical data and forecast, Bitcoin demonstrates a sideways trend with support around $108,100 and resistance around $111,700. The RSI consistently fluctuates between 37.7 and 46.9, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show the price oscillating within a defined range, with the bottom band frequently testing the $106,500 to $108,100 range and the top band fluctuating around $116,100 to $119,800. Considering these factors, I recommend a moderately conservative strategy focusing on range trading with RSI signals. We will combine RSI, Bollinger Bands, and support and resistance levels to create an efficient portfolio. The strategy involves entering long positions when the RSI dips below 30, indicating an oversold condition, and exiting when the RSI reaches 70, suggesting an overbought scenario. Specifically, when the price touches the support level of $108,100 and the RSI is below 30, enter a long position at $108,100. Place a stop-loss order at $107,000 to protect against potential downside. Set a target price at $110,800, aligning with the resistance level and anticipating a bounce. The forecast data suggests a price range between $109,600 and $110,800, supporting this target. This combined strategy balances risk and reward, capitalizing on short-term price fluctuations within the established range while incorporating technical indicators for precise entry and exit points. Based on the historical data and forecast, Ethereum exhibits a sideways trend with fluctuating RSI values and Bollinger Bands. The RSI consistently remains within the 49 to 59 range, indicating neither strong overbought nor oversold conditions. The forecast prices for the next week are relatively stable around $4,320 to $4,390, suggesting continued consolidation. Therefore, I recommend a neutral to slightly bullish strategy. We will implement a strategy based on the Bollinger Bands, aiming to capitalize on minor price fluctuations within the established range. Our strategy involves a series of short-term trades. We will enter a long position at $4,320, coinciding with the forecast price and the lower Bollinger Band. To mitigate risk, we will set a stop-loss at $4,270, just below the support level. The initial target price will be $4,370, aligning with the recent historical close and the center of the Bollinger Bands. If the price reaches $4,370, we will consider moving the stop-loss to the entry price of $4,320 to secure profits and potentially ride further upward momentum. If the price shows signs of reversal and approaches $4,270, we will exit the position. This strategy aims for incremental gains within a defined range, minimizing risk and maximizing potential returns in a sideways market. Based on the historical data and forecast, XRP exhibits a sideways trend with support at $2.8 and resistance around $3.07. The RSI fluctuates between 39.6 and 49.1, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within a range, with the lower band around $269 to $281 and the upper band around $38 to $337. Considering the forecast for September 8th to 14th, the price is expected to hover around $2.8 to $2.87, reinforcing the sideways trend. I recommend a strategy that capitalizes on short-term price fluctuations within this range. My proposed strategy is a range-bound trading approach. We will initiate a long position when the price touches the lower Bollinger Band, specifically at $2.76. The stop-loss will be set slightly below the lower band at $2.7 to mitigate potential losses if the price breaks down. The target price will be set at the resistance level of $3.07. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at $2.8 with a stop-loss at $2.7 and a target price of $3. This combined strategy aims to capture profits from short-term price movements within the established range, balancing risk and reward. Based on the historical data and forecast, BNB shows an overall upward trend with some volatility. The RSI consistently fluctuates around the midpoint, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering the forecast for September 8th to September 14th, with prices trending upwards to $903, I recommend a long position strategy. Entry price should be $863, with a stop loss set at $856 to protect against potential downturns. A target price of $894 would provide a significant profit while allowing room for further upward movement. To optimize returns, I propose a portfolio combining the RSI, Bollinger Bands, and trend analysis. When the price touches the lower band, enter a long position at $863. Place the stop loss at $856, just below the recent low. Set the initial target price at $894, aligning with the forecast peak. If the price reaches the target, consider trailing the stop loss upwards to lock in profits and potentially capture further gains as the trend continues. This strategy balances risk and reward, capitalizing on the predicted upward momentum while mitigating potential losses. Based on the historical data and forecast, Solana shows a slight upward trend with periods of consolidation. The RSI fluctuating between 51 and 62 indicates neither strong overbought nor oversold conditions, suggesting a balanced market. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback or a continuation of the upward trend. Considering these factors, I propose a moderately bullish strategy. We will enter a long position at $203, coinciding with the start of the forecast period. A stop loss will be placed at $197, just below the recent price action and below the lower Bollinger Band, to limit potential losses. The initial target price will be $212, aligning with the forecast for September 8, 2025. To refine this strategy, we'll incorporate a dynamic target adjustment. If the price reaches $212, we will move the stop loss to break even at $203. Further, if the price continues to rise, we will set a second target price at $214, based on the forecast for September 11, 2025. If the price fails to reach $212 and shows signs of reversal, we will exit the position at $205, cutting losses and protecting capital. This layered approach combines a bullish outlook with risk management, maximizing potential returns while minimizing downside exposure. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The RSI fluctuates between 44.6 and 54.3, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the support price of 0.223 and resistance price of 0.24, I recommend a long position entry at $0.215. Place a stop-loss order at $0.205, just below the bottom of the Bollinger Bands, to protect against unexpected downturns. Set a target price at $0.228, aligning with the upper Bollinger Band and approaching the resistance level. To refine this strategy, I will incorporate RSI signals. If the RSI drops below 20, oversold, enter a long position at the corresponding price. Conversely, if the RSI exceeds 80, overbought, consider a short position. However, given the current upward trend, I prioritize the long position. Therefore, I will maintain the initial entry at $0.215 with a stop loss at $0.205 and a target price at $0.228. This portfolio combines trend analysis, Bollinger Bands, and RSI signals for a balanced and potentially high-return investment. Based on the historical data and forecast, TRON shows a downtrend. The RSI consistently dips below 50, reaching a low of 32.3 on September 7, indicating an oversold condition. The forecast predicts further decline, with prices ranging from 0.325 to 0.314. Considering the support price of 0.327 and the declining trend, I recommend a contrarian strategy aiming for a potential reversal. We will initiate a long position at $0.315. Given the oversold RSI and the proximity to the support level, we will set a tight stop loss at $0.313. Our initial target price will be $0.337, aligning with the recent resistance level. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price breaks below $0.314, it suggests a stronger downtrend, and we will immediately exit the position. Conversely, if the price touches the upper Bollinger Band of $0.366, we will consider taking partial profits at $0.341 and adjust the stop loss to break even. This portfolio combines RSI and Bollinger Bands to manage risk and maximize potential returns in a volatile market. Based on the historical data and forecast, Cardano demonstrates a sideways trend within the support of $0.81 and the resistance of $0.931. The RSI fluctuates around the 50 level, indicating a lack of strong directional momentum. The Bollinger Bands show that the price has been oscillating between the upper and lower bands, suggesting periods of volatility and consolidation. Considering the forecast for the next week, the price is expected to remain within a similar range, with an average of $0.825. Therefore, a range-bound trading strategy focusing on short-term price fluctuations within the established support and resistance levels is recommended. We will implement a combined strategy using RSI and Bollinger Bands. First, we will look for opportunities when the RSI dips below 40, indicating a potential oversold condition and a possible entry point. For example, on August 31, 2025, the RSI was 44.8, so we can enter at $0.802. Set a stop loss slightly below the lower Bollinger Band, around $0.78, to protect against unexpected downside movements. Aim for a target price near the upper Bollinger Band, around $0.922, to capitalize on the anticipated upward bounce. If the RSI reaches above 60, indicating an overbought condition, we can consider a short position. For example, on September 2, 2025, the RSI was 51.0, so we can enter at $0.859. Set a stop loss slightly above the upper Bollinger Band, around $0.88, to protect against unexpected upside movements. Aim for a target price near the lower Bollinger Band, around $0.81, to capitalize on the anticipated downward bounce. This combined strategy will help to maximize profits by exploiting both bullish and bearish price movements within the established range. Based on the historical data and forecast, Chainlink shows a downtrend with fluctuating volatility. The RSI consistently hovers around the 50 level, indicating a neutral market sentiment. The Bollinger Bands suggest periods of high volatility, but the recent narrowing indicates a potential consolidation phase. Considering the support price of $22.2 and the forecast prices around $22.6 to $22.8, I propose a short-term contrarian strategy. We will enter a long position when the RSI dips below 20, indicating an oversold condition. Given the recent price action, let's set an entry price at $22.5. A stop loss should be placed just below the support level at $21.5 to limit potential losses. Our target price will be the recent resistance level of $23.4, aiming for a profit of $0.9. To refine the strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, it strengthens the oversold signal, reinforcing our entry. If the price approaches the upper band before reaching our target, we'll consider taking partial profits at $23. This approach balances risk and reward, capitalizing on short-term price fluctuations while protecting against significant downside risk. The final portfolio will be a combination of RSI and Bollinger Band strategies, with an entry price of $22.5, a stop-loss price of $21.5, and a target price of $23.4. Based on the historical data and forecast, Wrapped Beacon ETH has shown a volatile trend, bouncing between a support price of $4,600 and a resistance of $4,790. The RSI indicates that the asset is currently within a neutral range, fluctuating around 50, with recent readings suggesting a slight oversold condition. Considering the forecast for the next week, which predicts prices around $4,650 to $4,720, and the Bollinger Bands, which have been widening, indicating increased volatility, I recommend a cautious long position strategy. We will enter a long position at $4,650, placing a stop-loss order at $4,600 to limit potential losses. The initial target price will be $4,720, aligning with the forecast and the upper Bollinger Band. To optimize the strategy, we will implement a dynamic target price adjustment based on the RSI. If the price reaches $4,720 and the RSI crosses above 70, indicating an overbought condition, we will take partial profits and move the stop-loss to the entry price of $4,650. This locks in profits while allowing the position to continue benefiting from potential upward movement. If the price fails to reach $4,720 and the RSI falls below 30, suggesting an oversold condition, we will exit the position entirely, securing a small profit or minimizing losses. This combined approach leverages the RSI, Bollinger Bands, and forecast data to maximize returns while managing risk effectively. Based on the historical data and forecast, Lido DAO has been exhibiting a generally downward trend, though with some volatility. The RSI values have fluctuated between 43.4 and 51.5, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been contracting, suggesting decreasing volatility. The forecast for the next week predicts a continuation of this downward trend, with prices hovering around 1.19 to 1.15. Considering the support price consistently at $1.16, I propose a strategy that leverages potential bounces from this level. We will implement a strategy based on the RSI with an oversold level of 20 and an overbought level of 80. My recommended strategy is to enter a long position when the price touches the support level of $1.16. Place a stop-loss order at $1.14 to mitigate potential losses if the price breaks below the support. Set a target price at $1.24, which aligns with the recent resistance level. This strategy aims to capitalize on potential short-term rebounds from the support level, while the stop-loss protects against further downside. The forecast data suggests a cautious approach, so managing risk with a tight stop-loss is crucial. This is a high-risk, high-reward strategy, suitable for experienced traders comfortable with short-term volatility. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown a fluctuating trend with support at $0.622 and resistance at $0.701. The RSI fluctuates around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been contracting recently, suggesting decreasing volatility. Given the forecast price hovering around $0.595 to $0.602 for the next week, and the RSI consistently below 50, I recommend a cautious long position. We will enter a long position at $0.595, placing a stop-loss order at $0.571, which is below the bottom of the Bollinger Band. Our target price will be $0.655, aligning with the recent center of the Bollinger Bands and a reasonable profit target given the current market conditions. To refine this strategy, we'll incorporate a layered approach. If the price reaches $0.624, we will move the stop-loss to $0.604 to secure profits. If the price continues to rise and touches $0.655, we will take partial profits, selling 50% of the position, and move the stop-loss to the entry price of $0.595 to protect the remaining investment. This layered approach allows us to capitalize on potential upside while mitigating risk. This portfolio combines the RSI, Bollinger Bands, and support/resistance levels to create a balanced and potentially high-return investment strategy. Based on the historical data and forecast, Polkadot shows a slight upward trend, consolidating between support at $3.76 and resistance at $4.23. The RSI fluctuates between 44.6 and 53.9. Indicating neither extreme overbought nor oversold conditions. However, the Bollinger Bands provide valuable insights. The price has recently been approaching the lower band, suggesting a potential bounce. The forecast for the next week indicates a gradual increase, with prices hovering around $3.78 to $3.95. Therefore, I propose a moderately bullish strategy. My recommended strategy is to enter a long position at $3.78, placing a stop-loss order at $3.76 to mitigate potential losses. The initial target price is set at $3.89, aligning with the recent resistance level. If the price breaks through $3.89 and continues to climb, I will adjust the target price to $4. This strategy combines the support and resistance levels with the Bollinger Band's indication of a potential bounce, aiming for a balance between risk and reward. The RSI readings, while not strongly indicative, do not contradict this moderately bullish outlook. Based on the historical data and forecast, TRON shows a downtrend. The RSI consistently dips below 50, reaching a low of 32.3 on September 7, indicating an oversold condition. The forecast predicts further decline, with prices ranging from 0.325 to 0.314. Considering the support price of 0.327 and the declining trend, I recommend a contrarian strategy aiming for a potential reversal. We will initiate a long position at $0.315. Given the oversold RSI and the proximity to the support level, we will set a tight stop-loss at $0.313. Our initial target price will be $0.337, aligning with the recent resistance level. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price breaks below $0.314, it suggests a stronger downtrend, and we will immediately exit the position. Conversely, if the price touches the upper Bollinger Band of $0.366, we will consider taking partial profits at $0.341 and adjust the stop-loss to break even. This portfolio combines RSI and Bollinger Bands to manage risk and maximize potential returns in a volatile market. Based on the historical data and forecast, Bonk demonstrates a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently hovers around the 40 range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been oscillating within the bands, suggesting sideways movement. The forecast for the next week predicts a slight downward trend, with prices ranging between $0.0000190 and $0.0000194. Considering the support price of $0.0000203, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy is a combination of RSI and Bollinger Bands. I will enter a long position at $0.0000190, coinciding with the forecast price and the lower Bollinger Band. The stop-loss will be set at $0.0000190, just below the recent low, to limit potential losses. The target price will be $0.0000210, aligning with the recent resistance level and a conservative profit target. This strategy aims to capitalize on potential bounces from the support level and lower Bollinger Band while mitigating risk with a tight stop-loss. The overall portfolio will allocate 60% to this strategy and 40% to a holding position, expecting a gradual increase in price over the long term. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The RSI fluctuates between 44.6 and 54.3, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the support price of $0.223 and resistance price of $0.24, I recommend a long position entry at $0.215. Place a stop-loss order at $0.205, just below the bottom of the Bollinger Bands, to protect against unexpected downturns. Set a target price at $0.228, aligning with the upper Bollinger Band and approaching the resistance level. To refine this strategy, I will incorporate RSI signals. If the RSI drops below 20, oversold, enter a long position at the corresponding price. Conversely, if the RSI exceeds 80, overbought, consider a short position. However, given the current upward trend, I prioritize the long position. Therefore, I will maintain the initial entry at $0.215 with a stop-loss at $0.205 and a target price at $0.228. This portfolio combines trend analysis, Bollinger Bands, and RSI signals for a balanced and potentially high-return investment. Based on the historical data and forecast, Pudgy Penguin shows a sideways trend with support at $0.0285 and resistance at $0.0377. The RSI fluctuates between 41 and 49, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast for the next week predicts a slight downward trend, starting at $0.0281 and gradually decreasing to $0.0283. Considering these factors, I recommend a moderately conservative strategy focusing on short-term price fluctuations within the established range. My proposed strategy is a combined approach using RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands. Given the current RSI around 43 and the forecast price starting at $0.0281, we will wait for a pullback to the lower band. Let's assume the price reaches $0.0278. The entry price will be $0.0278. The stop loss will be set just below the support level at $0.0275 to protect against further downside. The target price will be the center of the Bollinger Bands, which is currently around $0.0307. This gives us a potential profit of $0.0307 to $0.0278 equals $0.0029. This strategy balances risk and reward, capitalizing on short-term volatility within a defined range. Based on the historical data and forecast, Worldcoin demonstrates a generally upward trend with increased volatility. The RSI consistently fluctuates, indicating periods of both oversold and overbought conditions. The Bollinger Bands show the price fluctuating within a range, with the recent narrowing suggesting a potential breakout. Considering the recent upward momentum and the forecast predicting further price increases, I recommend a long position strategy. We will use a combined approach leveraging RSI, Bollinger Bands, and support/resistance levels for optimal returns. My strategy involves entering a long position when the RSI dips below 30, indicating an oversold condition. Specifically, enter a long position at $0.86. The stop loss will be set just below the lower Bollinger Band to protect against downside risk, at $0.84. The initial target price will be at the support level of $0.946, aiming for a quick profit. If the price breaks above the resistance level of $1.12, we will adjust the target price to $1.02 based on the forecast data. This combined strategy aims to capitalize on short-term volatility while benefiting from the overall upward trend. Based on the historical data and forecast, EIGEN Eigenlayer, exhibits a generally upward trend with some volatility. The price has been fluctuating between support at $1.27 and resistance at $1.51. The RSI values have mostly remained within the 40 to 60 range, indicating neither extreme overbought nor oversold conditions. However, the forecast for the next week projects a continued upward movement, with prices potentially reaching $1.41. Considering the Bollinger Bands, the price has recently been approaching the lower band, suggesting a potential buying opportunity. Therefore, I recommend a long position strategy focusing on capitalizing on the anticipated upward trend. Specifically, I suggest entering a long position at $1.26. Given the recent dip towards the lower Bollinger Band, this price represents a favorable entry point. Place a stop-loss order at $1.23 to limit potential losses if the price reverses. Set a target price at $1.38, aligning with the forecast for September 14, 2025. This strategy combines the upward trend, RSI readings, and Bollinger Bands analysis to maximize potential returns while managing risk effectively. The portfolio will be 60% long position, 30% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, shows a generally upward trend, with some volatility. The RSI fluctuates, indicating periods of both overbought and oversold conditions. The Bollinger Band suggests potential price consolidation and breakouts. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI falls below 20, indicating an oversold condition, and the price touches the lower Bollinger Band. Conversely, we will exit the position when the RSI reaches 80, signaling an overbought scenario, or the price touches the upper Bollinger Band. Specifically, on September 14, 2025, with a forecast price of $3.84, the RSI is likely to be below 20 and the price is near the lower Bollinger Band. We will enter a long position at $3.64, setting a stop loss at $3.14 to protect against potential downside risks. The initial target price will be $3.89, aligning with the forecast for September 14, 2025. We will then adjust the target price based on subsequent price movements and technical indicators, aiming to maximize profits while managing risk. This combined strategy aims to capitalize on both short-term volatility and the overall upward trend of 4.